The 2025 Soros financial massacre. You can laugh at Warren Buffett for selling U.S. stocks and missing out on the dot-com boom in 2000 or even last year's AI stock surge. But there's one man you should never underestimate. It's been 28 years since 1997, and he's been waiting patiently all this time. While the world may have forgotten about him, he never once let go of his hunting rifle. He's been lying in wait, silent, calculating, watching for the perfect moment to pull the trigger. Because firing too early would scare off the prey, and that would mean everything he worked for would go to waste. But now, after decades of waiting, he's finally pulled the trigger. What does that mean? It means a meticulously calculated death warrant has just been signed. If you still don't realize how serious this is, if you're blindly buying up American assets, whether it's stocks, bonds, or even just holding on to US dollars, then you're running straight into a financial disaster. You're going head-to-head with a market manipulator. You're taking on an organization led by none other than George Soros, and this time, his sights are locked on Elon Musk. Welcome to Richmind Channel. Recently, Tesla stock, owned largely by Musk, was aggressively shorted and has now plummeted by 55%. What is short selling? It's actually pretty simple. Normally, people make money by buying low and selling high, right? But short selling is the reverse. Imagine you buy a Tesla stock for $100. That means you now hold $100 worth of Tesla shares. Now, I want to short that stock. So I borrow your Tesla share and sell it right away at $100. I no longer have the stock, but I've got $100 cash. Then, when Tesla's price drops to $50, I buy it back. Now I have the stock again and $50 in profit. I return your share and give you $5 in interest. I still walk away with $45 profit. That's short selling. Sell high first, buy low later. If the stock price rises instead, I lose. If it stays the same, I still lose because I owe interest. That's how regular investors short. But why did Elon Musk himself recently claim that Tesla's stock collapse was due to intentional short selling by a group led by Soros? What does that even mean? Step 1, Soros manipulates public opinion. He controls a vast network of media outlets. So within just a few days, 47 major news organizations released over 3,000 negative stories about Tesla worldwide. Example, Tesla's sales in Germany fell 70%. Sales in China and across Europe were cut in half. Wake up, check your phone, and if you follow the market even a little, you'll see Tesla drowning in bad press. In just 1 week, panic selling of Tesla stock surged 178%. So how does this manipulation work? Simple. Use the media to infiltrate the public's mindset. Break down trust in Tesla. But that alone isn't enough, because people need to see something real before they fully believe. Step 2. Attack the stock price directly. When Tesla stock peaked, Soros made his move. He bought a massive amount of Tesla shares, then started selling them off. That sell-off accounted for 18% of Tesla's total circulating shares. In other words, he dumped shares equal to 18% of all existing Tesla holders, crushing the stock price. What if you didn't sell enough shares? Then I'll borrow from you. I'll dump the price and return the shares later. Don't want to lend them? No worries. I won't even ask. I'll borrow from your broker or your bank, because when you buy stocks, you don't actually hold them. Your broker or bank does, so I'll just borrow from them. Now, when your Tesla shares tank and the price keeps dropping, you start wondering, should I sell to cut my losses? Even if you don't sell, someone else will. The more people sell, the faster the price drops. Soros keeps selling too, and it keeps falling until you finally have no choice but to sell. Still not selling? Step 3. Physical sabotage. Dozens of Tesla showrooms get their windows smashed for no clear reason. Charging stations are vandalized. How can Tesla keep doing business in that environment? If the company can't function, would you still want to hold its stock? Still not enough? Step 4. The checkmate. When Elon Musk bought Twitter, he pledged 63% of his Tesla shares as collateral to get the cash for the deal. He couldn't sell them. If he did, Tesla would crash and he'd lose control of the company. So he used the shares as collateral. But now Tesla stock is tanking. The shares Musk pledged have lost value. Let's say originally he pledged stock worth $1 billion, and got a loan for $800 billion. But now those shares are only worth $800 billion. That means the bank's loan is now equal to the current collateral value. If Tesla drops further to, say, $700 billion, the bank will be at a loss. So what happens? They stop the loan immediately and demand full repayment of the $800 billion. If you fail to repay, the bank will sell those pledged Tesla shares on the open market to recover the debt. So, once Tesla stock hits the bank's red line and Musk can't repay, the pledged shares will be dumped immediately. That's when Soros's manipulation machine can swoop in and buy those shares at rock-bottom prices, then return them to the lenders they borrowed the stock from earlier. If you think this is just a personal feud between Musk and Soros, think again. The entire U.S. stock market is crashing. Now ask yourself, if Trump wins the election and even a major figure like Musk sees his stocks tank this hard, do you really think other stocks will be spared? This is the warning shot. Soros, who rarely makes a move himself, has finally acted. And he's not just targeting Tesla. Let me tell you, this is just the opening salvo in a meticulously planned financial massacre. You'll soon realize that Soros's current looting strategy has a chilling resemblance to what he did in 1992 when he crashed the Bank of England, and again in 1997 with the Asian currency crisis. The only difference now, his target isn't other countries, it's America itself. You might laugh and say, who would dare short the United States? But I'd laugh right back, because the 2008 financial crisis also started in the US. Back then, America was essentially bankrupt, and banks collapsed across the board. Yet today, the US is still standing tall. Why? Because while the explosion happened in America, the ones who suffered weren't Americans. It was the rest of the world. The ones who paid the price weren't the American people, but everyone else. So if you don't want to be a victim of this next crisis, and maybe even hope to rise up the social ladder, you should consider subscribing to my channel. I'll be sharing a lot more in future videos. And if you're worried you'll forget what you just heard, wasting the time you spent watching, go ahead and like this video. It'll be saved in your playlist so you can come back anytime and take action. First off, even the Federal Reserve, America's own central bank, has been losing money for years. The U.S. government is out of funds and running on empty. U.S. Treasury bonds? Nobody's buying. No one wants to lend money to America anymore. On top of that, the U.S. stock market bubble, once pumped up by AI hype, is bursting. Inflation is out of control, and every major economic indicator is signaling a recession. Yet the Fed still refuses to cut interest rates. What's worse is that post-pandemic, America feels eerily hollow. Offices and commercial spaces sit empty. Interest rates are too high, making it impossible for property owners to service their debts. As a result, banks are once again saddled with massive bad loans. Now let me ask you, do you understand what all of this means? It means the conditions for malicious short selling are nearly complete. If you still don't grasp the big picture, then you'll only start paying attention when the market truly crashes. And by then, it'll be too late. Because this playbook hasn't really changed, it's just the same old poison in a new bottle. What does that mean? It means when God wants to destroy you, He first makes you lose your mind. Back then, when Southeast Asia was booming and China was raking in money, asset prices were skyrocketing. Everyone was obsessed with speculation. That was the moment the prey was at its weakest. That's when Soros picked up his sniper rifle and fired 3 deadly shots that triggered a financial crisis across Asia. The first shot was shorting Thailand's stock market. Soros targeted major banks and financial firms in Thailand and ordered a massive sell-off of their shares. Meanwhile, global media outlets, even the Bank of Thailand, started spreading news that these financial companies were in serious trouble. The public panicked and rushed to withdraw their money from banks and financial institutions. That led to a wave of defaults, and the Thai stock market collapsed almost instantly. The second shot tested whether the Thai government would intervene. If they didn't, the entire economy, stock market, and all local assets would crash, allowing Soros to buy them up dirt cheap. Most of Thailand's wealth would fall into his hands, without even needing a third shot. But if the government did step in, they'd have to dip into the national treasury, and that's exactly when he'd fire the third shot. And that's what happened. The Thai government poured hundreds of billions of US dollars into trying to stop the financial crisis and block Soros, but they had no idea how severe the consequences would be. Soros immediately launched his final assault, shorting the Thai baht, the country's national currency. Not stopping there, he divided his forces and began shorting currencies across Southeast Asia. He sold regional currencies en masse and bought up US dollars. Why? Because once the baht collapsed, other currencies in Southeast Asia would fall like dominoes. He expanded the battlefield and launched a full-scale assault across the region. Countries like Indonesia, the Philippines, Myanmar, and Malaysia, none could escape the onslaught. And the result? Everyone still remembers. Soros walked away a big winner, pocketing massive wealth. Meanwhile, Southeast Asia, its prosperity, its wealth, its decades of hard-earned progress was wiped out. Fixed exchange rate systems crumbled. This is proof that Soros's three-shot shorting strategy was tightly coordinated. The first shot was just to clear the path for the final one. Now ask yourself, is that same playbook being used again? In previous videos, I pointed out that Buffett and other American capitalists have quietly pulled out of the US market. At the very top, all that's left is a massive pile of cash. So, who holds US stocks now? Right now, individual investors hold 30% of US stocks. American mutual funds hold around 50%. So, many people assume that the US stock market is mostly in the hands of big institutional players. But the truth is, 95% of the shares in those mutual funds are owned by individual investors. In other words, about 30% of US investors buy stocks directly. Another 40–50% invest through mutual funds. On top of that, foreign investors own about 10% of US stocks. When you add it all up, even with a conservative estimate, at least 70–80% of US stocks are now held by individuals and foreigners. So if the US stock market crashes, who will be the ones to take the hit? Will it be the capitalists like Buffett, Bill Gates, or Zuckerberg? Those who already sold off their US stocks and pulled out? In reality, it's the retail investors and the massive flow of global money that's been poured into the US stock market who will bear the losses. Even if this next disaster explodes on American soil, it'll be just like the 2008 financial crisis. Back then, capitalists got government bailouts and took out zero-interest loans from the Federal Reserve to scoop up cheap American stocks, and the ones who suffered? Regular investors. And the entire world. Why did Soros target Tesla for short selling? Some say it's because Soros represents the EU, while Elon Musk represents America, a personal rivalry. That may be partly true, but it's only scratching the surface. The deeper truth is, Tesla wasn't just a hot stock when Trump came to power. As recently as last week, Tesla still made up nearly 5% of the NASDAQ index. It's also one of the few stocks in the AI sector that actually shows real-world potential. Just look at self-driving and smart parking tech. They're already here. That's why Tesla has attracted a flood of retail investors. From a short seller's perspective, if Tesla collapses, it could trigger panic selling among investors, cause a widespread crash in the US stock market, and pop the AI bubble all at once. More importantly, Elon Musk has been offloading shares of his own company recently. When you add that to the market setup and other strategic moves already in play, it checks all three boxes: the right time, the right place, and the right people for a large-scale short seller campaign. And what's more terrifying, Tesla might just be the beginning. Those still dreaming that holding long-term will save them might not realize their account balances are undergoing surgery without anesthesia. The world keeps making mistakes, yet many people have been taught since childhood that making mistakes is unacceptable. Their money's tied up in pensions, banks, and stocks. When markets crash, banks fail, and stocks bleed, they still teach their kids, don't make mistakes. So, if they don't end up poor, who will? Kids learn to walk by falling. To be a pilot, it's not just about flying a plane, it's about handling technical failures. Investing is the same. In a bull market, anyone can close their eyes, buy stocks, and probably make money. But in a bear market, the most important thing is knowing the difference between the two. Are you going to take stock tips from the lady selling knives at the market? Let me tell you something. In the stock market, whether or not you make money has nothing to do with how much potential a stock has. What really matters is this: is more money flowing in or out of the market? If sellers have stronger capital than buyers, even the best stocks will still fall. Put simply, the stock market rises or falls based on the moves of the big players. That's why we don't need to read financial reports or analyze the economy. All we need to do is follow the money. Follow where the big players are going. The real danger isn't just that Soros is shorting US stocks. It's that he's holding a final card that could be 100 times more devastating. This is the final move. If history repeats itself, the second shot is about to be fired. A liquidity crisis in the US. This would force the Federal Reserve to cut interest rates. Soros's genius lies in pressuring central banks to open the floodgates and trigger massive wealth transfers. What does that mean? When the US enters another crisis, retail investors in mutual funds will hit their stop-loss limits, leading to automatic sell-offs. Back in 2020, the US stock market plunged so hard that circuit breakers had to be activated. At that point, ETFs and mutual funds held by individual investors will see mass withdrawals. Even passive investors will panic and flee. The result? A total collapse of the US market. Then the Fed will be stuck with two choices. Sit back and watch the collapse continue, causing global capital to flee the US and triggering a dollar crash. Or take action, cut interest rates, or print more money to inject liquidity into the system. In most past financial crises, the Fed chose both, rate cuts and money printing. Now, just look at how much the US stock market has already dropped. Even the Fed has forecasted an upcoming recession, yet they still insist they won't cut rates. Why? The reason is simple. Cutting rates doesn't work anymore. Over the past few years, the Fed has been reporting losses. Why? Because they've been holding US government bonds that yield around 2.6%. While the interest they've been paying banks recently is around 4.4%. So, theoretically, cutting interest rates would reduce their interest expense. Wouldn't that stop the losses? So why aren't they doing it? Is it really because of inflation? The truth is, the Fed is starting to lose control of the US dollar. In fact, last year, the Fed already cut interest rates 3 times. Normally, if US government bonds are yielding 5% and the Fed cuts rates, people should rush to buy bonds and lock in that high yield, pushing bond prices up. But in reality, after the Fed cut rates in September, bond prices fell instead. That means fewer people were buying US bonds. In other words, when the market stops obeying the Fed, rate cuts lose their power. Right now, even with high interest rates, US bonds aren't selling. Their value has dropped by nearly half in the past few years. The US Treasury is running low on cash. If the Fed keeps cutting rates, bond prices will plummet even more, and a wave of US banks holding those bonds could go bankrupt. So at this point, cutting rates could actually trigger the next financial crisis. And that's exactly why, if the Fed wants to cut interest rates, they'll be forced to hold onto bonds, which means expanding the balance sheet, printing money to buy bonds themselves. In other words, if the Fed takes that route, their only option is to print money. And once they start printing, the supply of dollars will surge and the dollar will immediately lose its value. Do you see what's happening? Whether the Fed steps in to save the system or not, the end result is the same. The dollar will lose value. At that moment, Soros has already laid out his minefield. The third shot could be the one that helps him profit from the dollar's decline. First, Soros might choose to short the dollar, but will he actually do that? I'm not sure. Capitalists like him still rely heavily on the US. Letting the dollar collapse may not necessarily be in their best interest. However, when the dollar depreciates, you don't have to short it to make money. As money flows out of the US, there's a high chance it will seek safety in assets like gold. And in recent years, Soros has been buying massive amounts of gold. When the time comes, the value of the gold he holds will skyrocket. And that's when you'll realize it might not be a coincidence that Buffett invested in the Japanese yen earlier. Because if US stocks crash, money could flow back into Japan, pushing the yen higher. Look at what happened after the 2008 crisis. Gold prices rose by 180%, and the yen appreciated nearly 50% against the dollar. That's why I personally started investing in gold last year and began shifting into the yen by year's end. Compared to most people, I've already sold off a good portion of my remaining US stocks because I felt the returns over the past year were good enough and the dollar was at serious risk of devaluation. So I moved my dollars into gold and yen as a hedge. For investors and entrepreneurs, we don't need to guess the exact moment the US market collapses. All we need to do is prepare for the most likely scenario, and if it does happen, it's enough that our name appears on the list of winners. If it doesn't happen, we won't suffer any major losses. At most, we just miss out on a potential profit. In principle, Buffett is a big-time investor, and we're retail investors, so our strategies and plans won't be identical, But in reality, the core investment strategy is actually quite similar. When the third shot is fired, that will also be the moment when a massive wealth transfer takes place. Think about it. Who will be the ultimate victims? You might feel like this has nothing to do with you, but it's actually pretty straightforward. For example, Taiwan's labor insurance fund, Vietnam's national wealth fund, Japan's pension fund, or insurance funds in Europe. All of them have invested a substantial amount in the US stock market. When a crash comes, these funds will be forced to cut their losses and exit the market. After the 2008 financial crisis, global capital was pushed into safe haven assets, mainly US Treasury bonds. But what about this time? Sure, there are still buyers for US bonds, but when a crisis hits, will there still be anyone willing to buy? At the same time, the US will need to repay its debts to the world. But because the dollar has lost value, those debts will effectively be diluted. Back in 2008, the US collapsed, but other countries collapsed even harder. So who won in the end? It was the capitalists who had already bet on the yen and gold. They cashed out at the peak, then used the opportunity to scoop up assets around the world at bargain prices. Not to mention, the US started dumping domestic assets. When the crisis hit, US banks were the first to be bailed out by the government. But they weren't rescued right when the crisis began. They were only saved after the market had already collapsed. And once rescued, US banks used that money to buy up assets across the globe for dirt cheap, from Greek ports to Korean banks. Meanwhile, financial giants like Goldman Sachs and Morgan Stanley didn't just survive the crisis, they came out even stronger, their monopolies more entrenched than ever. As for Buffett, the fastest growth in his wealth came during that very period, when he started buying at the bottom during the 2008 crisis. The key point of this video is this. From now on, which asset goes up in price is no longer the most important thing. What truly matters is, do you hold essential assets like gold in your portfolio? Because what we really want is the capital needed to take advantage of that third shot, when global assets are being sold off at fire sale prices so we can swoop in and buy at a discount. In the end, here's what I believe to be the truth. Every time George Soros attacks a market or shorts it, the world criticizes him. But I want to say this, whether he shorts or not, the reality is that both the US stock market and US bonds are facing serious collapse risks. A financial crisis in the US is nearly inevitable. This issue has always existed. Soros is just the trigger. The crisis is merely the consequence. When the market crashes, you'll start seeing Wall Street media blaming the recession on Trump, Elon Musk facing backlash for laying off employees, and rising unemployment numbers. Some will even blame the Fed for not cutting interest rates, causing the US stock market to tank. But as I've said in earlier videos, the collapse of the US stock market might actually benefit the financial elites behind the Fed and even the US government itself. So the only thing left is to find someone to take the fall. Soros has never cared about his reputation, he just wants to make his money and get out. Also, if a major short seller like Soros makes the first move, it can trigger a wave of copycats leading to a powerful chain reaction. So if the collapse is truly inevitable and everyone's looking to dodge responsibility, then even if Soros really did light the match, he's still just another scapegoat. I've thought long and hard about whether I should say all this, but in the end I decided I had to, because I want you to understand one thing. In the flow of capitalism, there's no such thing as good or evil. There are only those who get richer and those who get poorer. The real question is, which side do you want to be on? The rich or the poor? Will the events ahead unfold the way we expect? How will we adjust our strategies? Since time is limited, I'll wrap up the video here. I share free knowledge on how to become wealthy, how to be an entrepreneur, an investor, and achieve financial freedom. If you don't want to miss out, follow my channel, hit the notification bell, and share this video freely. I sincerely hope that everyone who liked this video will soon achieve financial freedom. If today's video gave you even just 1 or 2 useful ideas that help improve your life, then I'm already happy.